Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, the 17th of April, 2024, getting on to 6:20 p.m. Central Time, 6:15. We're right in that time frame. All right. So let's talk a little bit about what's going on. You know, you're seeing that the metal markets are under some pressure, and take notice. I'm starting to play now with the July copper, the July silver. I'm a little early in the move, but that's okay. I don't want to be changing them too much later than this. And why the pressure? Well, the pressure because we are looking, number one, you fell pretty hard today in the energy markets. Number two, the inflation story, which has been here, has not gone away, but everything needs a breather. It's like running a marathon. This market's been on a tear to the upside, and I don't think you've done a lot of damage to the gold. Silver's turning down. Copper market's still acting bullish. The dollar was down today, and you're getting a bit of a rally, not very much, but a little bit of a rally in some of the currencies against the dollar. We saw bonds and notes rally today, up. I think it was more of a relief rally than a trend change. And I don't see anything to change the path of interest rates at this point. And I see nothing that's going to change the Fed path at this point in time. As we take a look at gold, you are still up 0.66%, $15.50 for the week. When we look at the daily bar chart, we're in a distribution area again. Now, let me explain that. You still have the pattern of higher lows that have been in place, but suddenly you have a high here and a peak here, you have lower highs. So like a triangle, you're dropping there and then the bottom comes in, you form a wedge. And that's what this market is doing now, and it's trying to figure out what its next move will be. In terms of moving averages, you're still over the 18-day moving average of closes. To get down there right now, you'd have to break the uptrend and turn into a downtrend. But remember, when I have the bias up, and I define bias as the relationship of current price to the 18-day average. When the market is over this, even if I got sell signals on the swing line, I avoid them because it's most likely a corrective move back to regroup against that average. Does it always work like that? No. But if you take a look, this market since February, that when it got over that 18-day average, it has stayed over it. So why would I think it's not going to fight a battle at it again? I'd have no reason to think different. When I look at Bollinger Bands, well, we know what happened. The market ran 5 days in a row over, then got back and fought back and forth here over and over, and now you're getting some sideways action, which is much needed. This is a pause in a market, in my opinion, that is still in the bull camp. However, you have lost the bullish momentum. I believe momentum leads price. And because the market has lost its bullish momentum, I've mentioned this now, today's Wednesday, a couple of days already it's happened. I think before you go for a new high, the odds favor going back to the 18-day average. And of course, if Israel overnight were to attack Iran, gold would probably not do that. But barring that, and barring Israel sitting back with the ally pressure on them, contemplating what do they do, what do they do so it's surgical to not get this thing going crazier? And yet now it's like a macho thing. Well, you hit me, I got to hit you back. It's terrible. It's the way it's always been. And I don't know what in the world will ever change it. Just go back to your Bible. Okay, it doesn't change. And you can see what's going on right through here as we take a look. All right. So when momentum disappears from the market on the upside, I step back. And that's what I've taught you here, and that's what I continue to do. I'll continue to use the gold-silver ratio with the May silver probably for a bit here. But if you were to ask me which silver to trade, I'd probably tell you you're right at the end where it might be time to move on to the July contract. But you make up your own mind. I'm looking at the market coming down. We had a bounce, and now the market's got to decide, does it go even further where silver gains on this market? Like the gold, you've lost your bullish momentum. I'm very concerned about it, and that leads me to step back. And just like the gold market, you had the higher lows, but you got lower highs. In the July copper, you're still embedded. Now, in my reports today, I put out a story that I saw in one of the news services about Chilean copper, and it's so fascinating how the mines are old and they're not producing the way they would. So what they're doing is they're trying to go deeper. Now, some of these mines are 50 stories down and more. And more. Can you imagine that? And what they're doing is they're using boring machines. They're going underneath the mines, not carving them out deeper, going under them for new sources. This is a 5-year project to get it operational, and the costs are through the roof. But the demand for copper is such, and going forward it is such, that it is a market that we have to look very hard at and understand that other than getting where economies just fail, copper is going to be in strong demand because of everything is used for electricity, the AIs, the cloud computing. It's just a very important part, and electric cars. If it's electric, copper is generally involved. Higher and low, low or high in the platinum. Remember I said this is the one that is just following. And in the dollar, you've got your embedded reading. So on the continuation of the break, I think you're going to see pros step in and try to buy the market. Now, tomorrow morning, we have a series of economic data. We get the jobless claims at 7:30, the Philly Fed Business Regional Activity Index at 7:30, existing home sales, that is going to be not new construction. Existing home sales for March is coming out at 9 o'clock. The Conference Board, this will be an important number. They're leading, coincident, and lagging economic indicators, and natural gas storage is going to come out as well. The last thing I want to remind you is I have a special report for you on the euro currency. It's a big one. Is the market going to go to parity is a big question we have to be asking ourselves. It could be. All right. If so, where do you come in? Why would it go there? I cover the fundamentals, the seasonal charts, the price counts. I do the weekly charts. I do the daily charts. I give you different ways to look at the seasonals and how each month gains or loses in this market, the euro, over time on a 20-year period. So a lot of data for you. So if you'd like to see the report, all you do is go to our website at iraepstein.com under the word research. Can't miss it. It'll say Euro Currency Report 416. It goes off our website on Friday. I only put them up for 3 business days. So Friday at some point it will disappear. You can move your cursor to the top here as well and go for it that way, and that'll lead you there. That you'll see an icon, give it a click. I'm Ira. I'll catch up with you in the next updates that I do right after this one or first thing in the morning. You have a good evening.